Hello, everyone, and welcome back to the program. This one requires you to turn up the volume. You know, BlackRock is the world's biggest asset manager. On the first day, they were humiliated by an XRP ETF that nobody anticipated. And the more you examine it, the more painfully clear it is that there is a strong argument for an XRP mega run, quicker than anything else in cryptocurrency at the moment. Before everyone else realizes what's going on, let's get started. As usual, click the thumbs up button and confirm that you are subscribed. It is the most effective method of channel support. And you know what? You can do it for free. This is where we will begin. This is when it becomes a little funny, isn't it? Canaries Capital's XRP ETF outperformed BlackRock, the last major player in traditional finance, on the first day after they launched their glitzy Bitcoin ETF. The 111 million inflows into BlackRock's current Bitcoin ETF round up to 112. It did 245 million, Canary. 245 million. More than twice as much as on the first day. Additionally, kudos to the Baron of Beach Street for seeing this early on. He is a true legend for recognizing this ETF before the rest of the market was giddy with anticipation. That's precisely why. All of a sudden, the Bitcoin maxi crowd is frothing at the mouth. Being the institutional favorite is important to their identity. Now, there is a very obvious statement from the institutions, is formally on the playing field and on the drawing board. In comparison to what is about to happen, those inflows appear insignificant. There, you can see it. A niche decimated XR piece on the first day. Canary isn't the biggest player in the game, let's face it. Additionally, if you believe that we are going to stop here, you are mistaken. The next piece of the puzzle makes those inflows appear quite small in comparison to what is about to happen because of the $20 trillion bomb that is about to drop. Trump drops it nonchalantly. He anticipates 20 trillion. Indeed, within the next 45 days, a T will be streaming into the U.S. economy. I don't care at the end of the year. Look, it makes no difference whose side of the political endeavor is involved. Markets completely blow up when you inject that much liquidity into the system. They don't just recover. And which asset class gains the most from both regulatory convergence and significant liquidity injections? Stocks aren't involved. Without a doubt, it's not real estate. It's cryptocurrency. And now XRP, demonstrating its institutional demand right away. Eventually, it becomes increasingly apparent that's the path we're going to take. Folks, it's not hype. The argument for XRP is rapidly strengthening. Speaking of behind-the-scenes developments, have a look at what Flare recently disclosed regarding the real-world applications of XRP. This is where we will begin. And now, we're actually going to start by turning to Philemon, the co-founder of Flares. He added that VCs warned him that the XRP community would never utilize DeFi, and then reality hit 70% of all bridges to Flare. It was like dropping the bomb, and the entire VC heard it. DeFi already has it. People aren't interested in it. That's 70% of the man. That's prudent financial practice. Before the rest of the cryptocurrency community even recognizes what's happening, an entire ecosystem is silently loading. Let me attempt to provide you with a brief summary of, therefore, Flare is a standalone Layer 1 EVM with a focus on data. We are essentially the only significant Layer 1 with fully codified data protocols, including for Web 2 and Web 3 data, as well as price oracles. Therefore, the validators manage all of that, and stakes are used to secure it. And since the beginning, we have been quite supportive of XRP, primarily because we believe that there is a reasonable way to add assets like XRP that lack smart contracts to a chain. Instead of using a wrapped version through a custodian, we wanted that chain to have its own data protocols. Thus, we constructed bridges to Flare using those data protocols. That's essentially the reason Flare exists. Since Bitcoin has already wrapped itself in XRP, we have been paying close attention to it. It's pretty big. The majority of the hundreds of Bitcoin L2s will not survive. Additionally, we believed that the XRP market was a particularly strong one, prepared for DeFi. And not a single person else during the time we were raising had that thought. Nearly all of the venture capitalists told me that the XRP army would never adopt DeFi. Now look at us. Since we established the bridge 5 or 6 weeks ago, we have observed that over 70% of the XRP that has entered our network is in DeFi. So we can investigate that in a moment. However, seeing those people who everyone said would never touch DeFi actually become involved. is pretty refreshing. The XRP community consistently disproves these individuals. Isn't that amusing? DeFi will never be used by us. 70% in DeFi. You will never own an exchange-traded fund. Had the biggest 2025 ETF on the first day's volume, in contrast to Solana. The amusing aspect of that, though, that most people overlook, is that Canary is far smaller than Bitwise. I sincerely hope that Bitwise had been introduced earlier, so that we could have made an apple-to-apple comparison. Bitwise will arrive the following week. Let's examine the ETF's Canary dashboard. Here's what we're examining. 1,077,345 in volume, with an average value of more than 1,684,000. That's how many shares of the ETF have been bought. Tom Lay just doubled down on finishing his SMP by the end of the year, which leads us to this point: pay attention. The markets fluctuate, and then well-known equities like AI, quantum, and nuclear plummet. However, it is in line with the notion that we were operational for 6 months. Ending in October, the markets were overpriced. We are receiving the 2 weeks of consolidation that we anticipated. As you are aware, there are also hawkish Fed talks. The market is experiencing a bit of a meltdown. However, we still have excellent seasonals through the end of the year. The profits have been good. You could see that sentiment had turned sour, Scott. The AI actually dropped to a negative 17.5. In my opinion, the risk-reward ratio for stocks remains strong through the end of the year. And before the end of the year, I believe the S&P will be above 7,000. In fact, by the end of the month, it may be above 7,000. Take a look at that. Let's now examine how this all comes to pass and how it fits into the current Bitcoin chart. And I've already discussed this with United members in my Patreon group. She might consider joining it. I reminded everyone that this CME gap needs to be taken seriously. One is enormous. The gap is approximately $92,000. Since 2023, all CME gaps have been addressed. It appears like Bitcoin is currently attempting to fill this. All of them since 2023, people. And Bitcoin isn't going to collapse if that happens. Actually, it's setting up, which brings us to the most exciting news I have in store for you. The most hilarious aspect of today's video. Take a look at this chart. Really. Take a look at the chart that is currently displayed on your screen. People are acting as though Bitcoin is dying, that cryptocurrency is dying, and that it will drop to zero. We keep getting caught up in the same faux D. It's likely that you'll hear the rumors that Tether is about to fail. It seems almost predetermined that we are bouncing off of a multi-year trend support. Take a look at this chart. Hey everyone, this chart moves up and to the right. The tendency is bullish. Retail, however, panics. At this time, Bitcoin is actually above $90,000 and people believe it is dying. Bitcoin is worth more than $90,000. Let's unwind. Your institutional men are giggling. It's $90,000, but Eric Trump says it will eventually reach $1 million, even if the sum was $100,000. Perhaps 5, 10, or 15 years when it reaches $1 million. It's a 10x. That's not available anywhere else. In the stock market, it takes 7 years to double your money. In the following 10 to 15 years, you will get 10 times your money back. That seems obvious to me. Let it go for 10 years and get 10 times your money. Talk about capital. Individuals seize these chances. How is the cryptocurrency market faring? They are retreating. The institutions are shaking them out, which leads us to this point because just as retail is beginning to worry that the bull market is ended, someone casually grabbed $64 million worth of Bitcoin as if it were a Costco run. But get some pizza from Costco. Straightforward conviction without fear or hesitancy. What do you want to know? This individual. What happens to Bitcoin now, tomorrow, or at the end of the year doesn't matter to them. For the next few years, they will be involved in this. How do they respond, though, retail? It's also easy. The market is collapsing, my God. Cool, I'll buy anything you're selling, the whales say. And they're doing precisely that. They purchase what you sell. This is my third bull